Hello and welcome. In this video, I'm going to be talking about what I would be doing if I was a big whale within a market. And when I mean whale, I mean somebody who has major control of it, thus having a lot of supply, both in the two coins that would be traded back and forth. So Bitcoin and an altcoin, as one example. And in cases where if you are a team of a certain coin, I would only hope that you have and a team or at least a single person on the team whom is involved in trading the market at definitely your own market, if not other cryptocurrencies. Because there's understandable if you're whatever coin and you're not trading Litecoin and DGB, even though that's not your coin, then that's understandable. Though if a team decides to do that to try to make their company more profitable, I would. But throwing that part aside, assuming you have a coin and you have it on the market, this is what I would do. I'd want to trade the market on all time frames, short term, mid term, long term, which means short term and all terms for that matter. You are adding supply for near term, mid term, long term orders, although, of course, you will be moving coins back and forth consistently as per market conditions in and out of course, different hardware wallets. With high volatility, you can do a range of like 580, 640. What I mean by that is, let's assume that means the last trade, maybe somewhere in the middle. Your last trade probably might have either been to sell at 639, buy at 581 kind of deal. And if anyone wants to bid at 590, 600, or ask to sell at 620, just let them do it. For you as someone who's in your market, you want to see participants as well, but you are adding supply for people who may want to buy or sell. And obviously, for your financial situation, you're trying to accumulate Bitcoin by doing this. And when you're just doing that, adding supply back and forth on the bid ask, trying to get the best of the sale, and when markets go up, you increase your bids, decrease your ask price, or increase both prices as they go up, decrease them both as they go down. You're going to do relatively well in trading the market. So midterm, long term means selling larger amounts, larger pullback sizes. As if I was to sell at 64 and buy back at 58, that's only nearly a 10% pullback. Where when I see these markets have 60, 70% pullbacks and more, then I want to play for 60, 70% buybacks, but those would be long term orders. And then midterm, maybe 30, 40% pullbacks, and so on and so forth. And all buybacks would be buyback 100% of the altcoins that you sold, not buyback 100% with 100% of the alt or the base currency. You gain alts. No. So if I sell 1,000 coins at 640, I'm looking to get the exact amount back at a cheaper cost, 580. So therefore, it would work out that if I'm playing this game and I pretty much own every number, which is not a bad, I would probably do that strategy on the short term. In fact, I would. So therefore, would I sell at 640, I'm buying at 581. Would I sell at 641, I'm buying, or excuse me, would I sell at 640, I might buy at 580. 641, I buy back at 581. So if I'm going to sell it all the way to 660, then my buy order will raise up to 600. And then on the way down, if it gets sold down to say 550, then I'll add some sell orders down to like 610 and just keep on moving it with the market. And on long term, if I sell say 10,000 at 900 Satoshi, then I might buy back 10,000 at 400 or even 300 Satoshi. But the key thing is I'm always buying back what I sell. And the reason for why I would be doing this is to have the bank currency available. The bank, your base currency. So that for every time I'm doing this, I'm adding to my bankroll of Bitcoin availability. And when I'm making hundreds and thousands and tens of thousands of trades over a significant period of time, then the amount of extra Bitcoin or dollars or Ethereum or whichever base currency I'm choosing, probably multiple ones if available. But a lot of markets are mainly traded with BTC, so that's what we'll work with. Then I would have that available for when the time is right. And let's just assume this is the way your market moved over a significant period of time, like that of say a year, 9 months, 2 years, whatever it may be. During all the situations, I mean, everything you sell goes down, buybacks. It's just an accumulation of all of these extra moves. And when you're having these intermediate and long term sell orders up here, all buying back, what has happened is an accumulation of a large amount of these bitcoins because you've bought it all back. And when you sold the amount in here for, say, one, whatever you sold for one Bitcoin up here, and you're buying it back much cheaper, it's costing you 0.375, we'll say. So that leaves 0.625. And you get all of these added up, a lot of them short term, many of them short term, a decent amount intermediate term, and the lower amount of the long term trades. Also, what you would probably notice amongst this is the volatility of this market would be a little lower had you not doing what you are doing. For by adding all of those short-term, intermediate-term, and long-term orders with the large supply that you have for both the buys and the sells, that means in situations where people are buying and doing all this stuff because you are acting aggressively as a market maker, then the prices won't go up or down quite as fast. So instead of having a 25x move over, say, 6 months, maybe you only have a 6x move. But you know what? That's a more healthy thing for a market as well. And that just means as well for the down, because when people are selling, if there's not as much supply, that means one big amount of players or a big sum of players over a certain period, like on this down move. If there's not as much supply, they'll bring it down 30%. And with larger supply, they might only bring it down 15%. And then you have your orders for when they do it. If they want to bring it up or down, you're ready to go, eager, willing to trade. But let's just assume, as say you're owning a company, you probably want your market to go up, especially because you probably own a lot of these coins. And now you'd be like, okay, now time for Operation Buy the Market Up is what we could be saying here. And when you're doing stuff like this basically means you're not buying everything at once. But now all of a sudden it means that if you're buying the market up, let's just two things are going to happen. First off, your sell orders are going to be in a different strategy. For if I'm going to be buying right now as it goes, and I'm going to essentially buy it up, say 30 basis points higher, then I'm not going to want to sell for at least 40 basis points or whichever. So I'm going to have no sell orders available in often spots where I normally would. Other people might notice this on market conditions, and I think it would be interesting to see how that would react in such, because a lot of people, regular traders, would see that there would be less of a supply maybe available, but not really, because I would be looking at it as well, and I'd be picking the right time. And one of the right times is when I see on the lower end of where I want to buy that there is a large person putting a big ask order in. Maybe it's irregular for someone to sell 4 Bitcoin at one time. And then I see in the area of, like, say between 600 to 604 as an example, or 600 to 610, there's just a lot. And then from 611 to 616, or excuse me, 611 to like 620, 630, there's nowhere near as much. Then I just might buy it up to that. And then I'm only using a percentage of what I've been by bank at this time. I want to buy more, but I don't want to buy it up immediately. I want to bring it up in segments. I want higher highs and higher lows. So I would add higher supply on my buy orders, hoping that some of them come through. And as a company, hoping only a few for that matter, but then ready to use that in future times. So whenever you see spots where markets are going up and big buy orders are coming in that follow after that, don't be surprised if that the market soon is ready for superior gains because they're doing something very similar to within this strategy. And something like this can span the plan of something like this. Say this is I know I've used different numbers, but say this is 500 and this is 5,000, and they're buying it up here at 540. Maybe you got a plan to buy it up to about here because everything you've been able to make, especially with all these small little intra moves in here. And this wouldn't count all the short term little moves because all the cool intraday stuff that would happen. But everything that I would move for that would be liquidated for spots like this. And I think that would obviously help the market out, especially if you're really strategic on when you do it. Because what you don't want to do is buy it up into a failed breakout point. And then your investment within your own company, albeit you're still doing fine, not as good as where it can be. Because ideally, when you buy it up, you want to buy it up so that if you're buying it up to, again, this point in here, the market's going to at least make it up to here, where you can then start to force out and liquidate at decent levels. Thank you for tuning in and have yourself a great day. Bye bye.